All right, so I firstly want to go over Delirium trading plan before we dive into the other trading plans. And the reason I structured it this way to explain it fully is because Delirium is at the core of the mentorship. And what I mean by that, every other trading plan is built around Delirium. So even your Thank God It's Friday, whatever, everything here, every other trading plan that is not called Delirium is built around Delirium. So it's based on the foundation of Delirium. So understanding the foundation, understanding the basics, which is the Delirium trading plan, can be very, very beneficial because then you can get very creative. If you understand Delirium, then you can get extremely creative with your trading plans. It is all based around Delirium. So what I would advise is understand Delirium first, and then afterwards you can build your own trading plan on that foundation that you understand Delirium. That is very important. So beneath this video, I have attached a Notion, and that Notion is will lead you, or the PDF file, whichever one you prefer. That Notion will lead you to the Delirium trading plan right there, and you'll see a page with Delirium, and beneath that it says monthly, weekly, daily, and or 4-hour context. Now, once we understand this foundation, just to touch on it really quick as well, once we understand this foundation, we can then build on it tomorrow with different trading plans, and then eventually the flow trading plan. Because I do think the flow trading plan requires a deep understanding of Delirium. These are the steps that we are taking. So if we look at my screen right here on the chart, the first step before we dive into the rabbit hole is needing to understand Delirium. Then we can add on to that with One Shot, One Kill, Thank God It's Friday, and the Lost Art trading plan. And we can get even more creative than that. These are just trading plans that are there for your inspiration. And then when we dive even deeper into the rabbit hole, we have the flow trading plan. That is very important. Now, we also need to understand that Delirium and One Shot, One Kill, Thank God It's Friday, Lost Art, they are mainly for a filtering process trading plan. The flow trading plan is, of course, where you focus on one instrument. So Delirium is a filtering process trading plan. That is how it functions the best. Because, also, let me explain that as well. If you don't apply a filtering process in the Delirium trading plan or One Shot, One Kill, Thank God It's Friday, Lost Art, what happens is you will have to wait quite a long time before you get those high probability conditions. And again, that is why we have a flow trading plan, because then we can dive into the lower time frame a bit more. So we can have more sort of high probability conditions. Well, not really high probability conditions, because when you think about it, if ES is the only thing we trade and it has low probability conditions currently, then we are stuck with ES. We can't change anything. That is why I like the filtering process myself, because I can change and there's always a better fish in the ocean. But with a flow trading plan where you focus on one instrument again, then it is very difficult because you can't really switch, etc. But again, I'm not saying one is better than the other. I'm just saying that before you dive into a flow trading plan, you need to have the basic foundation. You need to have the basic understanding of a Delirium trading plan, One Shot, One Kill, Thank God It's Friday, Lost Art, before you can dive into a flow trading plan. That is very important. So those are the steps. Now, again, if we look at the Notion, so please open up the Notion. The Notion right here says at the top, monthly, weekly, daily, and or 4-hour context. Then beneath that, we have instruments. So those are the instruments that we want to be trading. Once we open that page, so I have the page open right now, instruments, I would advise to focus on Forex for this trading plan. But if you truly want to trade indices, then add ES, NASDAQ, and YM to the list. Again, I would personally advise to focus on Forex for this trading plan alone. I think when you are trading ES, NASDAQ, and YM, that requires a trading plan on its own, like the flow trading plan. But the filtering process, like Delirium, for example, I don't think that works the best on ES, NASDAQ, and YM from my personal experience and from my personal data as well. So right here, these are all the majors right there, the US dollar pairs, and we have the crosses right there that we are seeing. So those are the ones that we will do a filtering process on. That is what we want to do and want to create an interest list on. So then if we move back to the homepage and move back to the homepage of Delirium, then we have the top down. Beneath instruments page, we have the top down. That top down right there is the exact top down that we talked about in the 6-dot top down analysis video in the first week 1.higher time frame analyst. So 1.6 essentially. Chapter 1.6 essentially. So right here, this is what we will be using, and this is what I use to get to my drawn liquidity, to get to my PD rate that I want to trade. This is how we start that filtering process and create that interest list eventually. That is what we want to be doing right here. Then eventually, if we move back again, so we move back. So we now have checked off essentially the higher time frame analyst phase. Now, if we want to move on to execution, we first need to understand, again, the risk management. So beneath the top-down page, we have risk management. If we open that risk management page, we have here an example of 10,000. Again, euro, US dollar, doesn't matter. The capital is not that relevant right here. But I need you to understand that the first trade of a fresh, brand new account, I want you to be risking 0.5%. If you lose that trade, which is just below it, right there, then you risk, again, 0.5%. No matter what happens after that, you risk 0.5% again. Then again, if we go back to the first trade, we risk 0.5%. If we win that trade, so on the right side, win, question mark, risk 1%. Win or lose, doesn't matter, risk 1% again. Then right here, that is of course as well, these are all things we have already touched on, right? So now it's coming together. Everything is coming together right here. So what are we doing right there? We are applying again that rule that we want to have 2 consecutive trades with the same risk amount. That is very important, right? What we talked about in execution. So right here, if we go below that, we see 1% profit and above. So 1% profit in your account, 1% risk. So 1% profit and above, you want to use 1% risk. In between 1% profit and 4% drawdown, 0.5% risk. 4% drawdown and lower 0.25% risk. Again, it also says beneath that, take into account the rule. The rule, what is the rule? Again, the rule is 2 consecutive trades with the same risk amount. So 1% profit and above is 1% risk. If that is your first trade right there of that 1% profit and above, and you lose that trade, so you drop back down into break even essentially on that account. So you start back at the account balance itself. All right, perfect. Then we risk 1% again. That's the same for 4%. That is the same, etc., etc., right? So that is very important to understand as well. So if we then move on and we move back to the home page of Delirium, and we have monthly context right there. So we have monthly context, monthly PD rate, etc. This is the Delirium trading plan. Now I want you to have this on another screen wherever you have it, or however you can have it next to your side, whatever. So I want you to have this beside you, and then I will go over the trading plan in depth, and you can see how it applies to every time frame. It is purely fractal. So whatever I'm doing, whatever I'm going to show you here, we can do the exact same thing on higher time frames, on lower time frames, etc. So this is Delirium. This is the foundation of everything. That is very important to understand. Now, what I want you to pay attention to, again, I'll do a quick top-down analysis here on Australian dollar CHF. If we go to the monthly time frame right here, what are we seeing? We are having that monthly fair value gap. All right, that can act as what? That can act as a potential magnet, and it can push price away again. So if we go to the top down again, the monthly order flow candle signs, perfect. We can potentially look to trade towards that monthly fair value gap because we have monthly context. On the weekly, what are we doing? On a weekly, we have this right there, that fair value gap. Can price push lower off that fair value gap? It could. Is it high probability? Absolutely not, because we have that monthly context right there. Perfect. Weekly done. Daily, what is the daily doing? All right, we are having some bullish price action, but I would like to have one fair value gap higher at least. We get one fair value gap higher right there. Perfect. What can we target? First target for that week being that weekly fair value gap right there. Second target after that, that monthly fair value gap that is sitting right there. Perfect. That is exactly what we want to take a look at. So we have our PD rate right there. Which day do we want to trade? We want to trade on a day where we have Australian dollar news or CHF news. Then price and time and price are in alignment. That is very important. That is what we want to have. So we don't need to go into the 4 hour right there because we already have that daily context. And then eventually as well, we want to trade that kill zone, of course. So right here, if we drop down into the 15-minute time frame inside that daily fair value gap, what will we see? What does the Delirium trading plan say? We have daily context. All right, we open up the daily context. Daily PD array to daily PD array. Entry, this is your first entry. 15-minute ST plus re. Enter on FVGs. That is what you want to do. Entering on FVGs, meaning that you either enter on the fair value gap or itself, or you enter on the creation of a fair value gap. That is also valid in my trading plan. Again, 15-minute ST plus re if you don't understand order flow, because every single thing that is mentioned here, ST, re, last line of defense, overlapping re-entries, etc. These are all things that we talked about in the order flow video, so they all are coming back. So everything here has already been defined. So I am, of course, I'm not trying to be rude, but right here, I will not go over the definition of an ST again, etc. because those have already been defined in a video itself. I already assume that you have that knowledge right there. So if we have a 15-minute ST plus re, enter on fair value gaps. Perfect. So what do we wait for? We have this ST and then we have a re right there. The ST is getting respected, so order flow is still intact right there. We have an order flow switch, the order flow lag right there. Perfect. That right there is where we want to enter. Enter on fair value gaps. Again, we could also enter off of this, right? And in this case, I just waited for which one do we sting into? Which one do we sting into? What do you want to cover? Cover the last line of defense. What is the last line of defense in this case? It's that low, right? That is your last line of defense based on order flow again. Target 2R minimum. So again, I would always advise in the beginning, you target 2R only. You don't go crazy just yet. You target 2R. Eventually, once you know, all right, I gain some confidence with it, I'm getting comfortable, etc. Perfect. Then we can target the context high or the context low eventually. But first, a 2R is more than enough. I am very happy with a 2R alone. So I like to target 2R myself. Then go break even when price has no reason to return based on float and lot. Again, the same premise that we went over, going break even. When you want to go break even, it is important to understand the time frames again. So understanding the time frames, what I mean by that is that there needs to be no reason for price to return back on the time frame you are entering or above that. So what I mean by that, if you enter on the 15-minute, which we do right now because we have daily context, so we enter on the 15-minute, then the 15-minute, there needs no reason to return back to our entry based on order flow. On the 1 hour, there also needs to be no reason to return back. Was there a reason to return back right there? Yes, there was. We have that fair value gap sitting right there. All right, there's a reason to return back right there. Perfect. On the 4 hour, no reason to return back. So on the 1 hour, there is a reason, but after this right there, after the new fair value gap, there is no reason, but it already hit take profit. Let's say we target that right there. Then right there, you would go break even because we only have one wick inside there. So is there a reason to come back? Yes, there is, but there's no fair value gaps lower right there. We already have a fair value gap in the lag. For price to do something like this and then continue higher, very unrealistic, right? So always break even. It's a little bit, it's like that 20% intuition and 80% mechanical. The 80% mechanical is based on order flow. The 20% intuition right there is knowing and using your brain, just being very logical, that price, when it's here and it has a fair value gap in the lag, so we have a new order flow lag higher, then there's no real reason for price to come back to the break-even level and then continue higher. That is just us FOMOing, that is us hoping that it's still going higher. That is very important, of course, to understand. So right there, you would be break-even. And then a potential re-entry. What is a potential re-entry? So a re-entry is after the first original entry has already taken place. A re-entry is following 15-minute overlapping re-entries in context of the timeframes above it. What do I mean by that? Following 15-minute overlapping re-entries is when you are following the order flow lags. Every new order flow lag higher is a potential re-entry. If it is in context of the timeframes above it. And what do we mean with that? Well, if we have an order flow lag with, for example, we have a 15-minute order flow lag. But if there was a 1 hour fair value gap below that order flow lag, is then your 15-minute re-entry in context of the 1 hour above it? No, that's the same premise as what we use on the higher time frame. We don't use a 4-hour order flow lag if there's a daily fair value gap just below it, because that is low probability. So that is also not where we want to enter. So is this 15-minute order flow lag that we are seeing here, this re-entry right there, is that in context of your 1 hour as well? Yes, it is. Perfect. So that is where we can enter, because there's no reason for price to come back below this low, below that order flow lag right there, based on the 1 hour as well, because now it is in context. The 15-minute is in context of the time frames above it. That is what we want to have. So we enter on the overlapping part with a fair value gap. Again, following 15-minute overlapping re-entries. What is an overlapping re-entry? We enter on the overlapping part. So the overlapping part is where we have, of course, we have this first line of defense. After a first line of defense, you usually have what? You have an overlapping part. That right there is your overlapping part. Overlapping fair value gap, and another discount array, another PD array is overlapping with a fair value gap. And then your last line of defense is right there. So that is again breaking down that order flow lag, what we talked about in the early videos of the higher time frame analyst in order flow itself. So again, what do we do now? Cover lot. Can you cover this low? Yes. In this instance, when it is a long wick right there, and we already would have been break even on the same premise right there, we would have been break even on this entry because we have this new order flow lag higher. Then does it make sense if we are break even on this entry to cover that low? Not really, right? So that is the same premise where now we can use the bodies. We can use that body right there because we don't expect it to come back to that entry right there. So why would we place our stop loss right there? So you cover the bodies right there. You cover the body and you target again the context high in this case. So the target daily context high and low. Right there. That is what you want to be targeting. This is Delirium. And then eventually, of course, what do we see? We have a new order flow lag higher. Now, I want you to think about, is that entry valid? Is this entry right there, is that a valid entry? That is what I want you to think about right now. And please answer it before I do. Is that a valid entry? No, it's not. And if you paid attention, why isn't it? Why is it not a valid entry? It's not in context of your 1 hour. Because the 1 hour has a fair value gap below that right there. So in that case, this second entry, or sorry, the third entry actually, but the second re-entry right there, this one is not valid right there. That is not a valid entry in this case. So you want to be waiting for the 15-minute to be in context of the time frames above it. And in this case, it wasn't. For it to be in context of the time frames above it, it needed to come into that 1 hour fair value gap right there, and then create a 15-minute order flow lag higher, and then continue higher off of that. So essentially what you would be doing, you would use that 1 hour discount array, the 1 hour fair value gap, as your PD array to trade off of based on the 15-minute order flow lags higher. So basically you have the same exact thing. You have a 1 hour PD array to PD array in the form of that 1 hour fair value gap right there towards those highs, towards the daily context high right there. And you want to look in this area right there for your 15-minute order flow lag higher. So just a 15-minute ST is perfectly fine right there. That is what you want to be doing. So that is what I mean with in context of the time frames above it. This is the very basic of Delirium. Now, again, this is very fractal, so it can have a lot of variations, as in the 4-hour context is basically the exact same. The only thing that changes is, of course, the context. So your 4-hour needs to be constant with your daily time frame, etc. So, for example, if we take a look at Canadian dollar JPY right here, and we look at last week's price action, and we again do our top down, just quickly going over it. All right, we are pretty bullish based on the monthly time frame. We have this target and that target right there. Perfect. What is the weekly doing? Weekly also bullish. No reason to return right now. Not creating a weekly fair value gap. Well, it is right now, but we didn't have a weekly fair value gap just yet. Daily time frame. All right, also pretty bullish right now, but we do have that fair value gap, but currently no fair value gap that we are trading into. Now on the 4 hour, what are we seeing? On the 4 hour, we are very close to the drawn liquidity. In this case, this is again where the intuition part comes in. We have this daily fair value gap right there, and we have this 4 hour fair value gap right there. Does it make sense when price is already there for price to come back into that daily fair value gap right there and then continue higher when it's close to the drawn liquidity? Not really. Now, again, if we compare this, if we look at it from a mechanical standpoint, if we compare this to Australian dollar CHF, what we just saw, that Australian dollar CHF would be higher probability. Why is that? Because Australian dollar CHF didn't have a daily fair value gap or anything below that, right? Or didn't have a weekly fair value gap. So the daily on Australian dollar CHF was in context of that weekly time frame. Perfect. That is exactly what we want to see. So here, the 4 hour isn't in context of the daily. So we are close to the drawn liquidity, but is it super high probability? There's an argument to it that it's not super high probability because we have that daily fair value gap. That is indeed correct. So if we do look at an entry, a hypothetical entry right there, then, and we go into the 5 minute. So the right time right there. Again, I always want to be entering in between 2 a.m. and 12 a.m. New York Eastern time. In between 2 a.m. and 12 a.m. So that is, of course, just to very easily break down. These are the times I want to be entering. Now, of course, not that exact, but these are just the hours. Inside those hours, I want to be entering. I have my alert set, etc. This is where I potentially want to be entering. And ideally, I want to be entering in between 2 a.m. to 10 a.m. That is my ideal scenario. That is the highest probability for me. So these are the hours right there. The in between those I want to enter. New York local time, of course. So right here, if we do take a look at a 4 hour fair value gap right there, and we want to look again, 4 hour context, perfect. 5 minute ST plus re-enter on FVGs, perfect. So right here, we have this ST. We are not creating a re-higher. All right, so we wait, and there we have a rehire. Perfect. So that is where we can enter. What do we cover? Cover lot. Lot, what is the lot again? All right, do we have a reason to come back below this low right there? 15-minute time frame? No. 1 hour time frame? Nope. All right, perfect. So that is perfectly fine. Stop loss placement right there. Perfect. So let's see, what are we doing right here? We are targeting 2R minimum. 2R, perfect. That's my 2R. Go break even when price has no reason to return based on lot and float. All right. Here, price depth for value gap. Does price still have a reason right there to return? Yes. Yes. It doesn't have just one wick that we saw on Australian dollar CHF. So yes, there is a reason for price to return right there. Now, this is also where it gets interesting, because when price eventually is closer to your drawn liquidity, and we have a lot of fair value gaps right there to work with. And again, we are already here. We are very close. Is it again logical for price to come back all the way back down and then continue higher? No. So that is again where you want to go break even. That is very important itself. So then eventually a re-entry. Follow 5 minute overlapping re-entries in context of the time frames above it. All right. 5 minute right here. We have that order block, and that is overlapping with that fair value gap. So the first line of defense is this right there. It's that order block. The second line of defense, or your overlapping part, is that part right there. So that would just be your re-entry right there. Cover lot. Lot is right there because it doesn't have a reason to come back below that. Perfect. So then eventually target your 4 hour context high / low. Context high. Perfect. Go break even when price has no reason to return based on lot and float. And eventually, again, same. Right there, we are already closer to the drawn liquidity right there. Would we go break even? Yes, we would go break even when we are that close right there. Perfect. That is how you capitalize on those moves. And this is a full trading plan on its own. Now, again, what I need you to understand is that this is a trading model that, of course, requires knowledge, as in all the knowledge that we talked about in the videos. If you don't have those, if you don't have that knowledge, if you didn't watch every video, so I'm also talking about psychology videos, then will this work? Absolutely not. It won't work. I can guarantee you that. I can guarantee you now that you can, I would advise you can quit. You can quit. If you're not watching every video here, then it's not going to work. Of course it's not going to work. So that is very important, because essentially what I'm constantly doing here, I am telling you my own story of how I got to this trading plan, of how I got to every concept, etc. So that is very important. This is the foundation of everything, Delirium. The foundation of everything. Now, we end the notion with context target taken. You need new context always. So eventually, in the next months, we will apply this in a live trading. Of course, these are hindsight examples, although we, of course, call these levels as well, etc. And we call these entries here as well. But I want to go over live examples as well in the next months when we are done with this current enrollment. That is very important to understand as well. So for you, it is important. You can make your own case studies. You can make your own examples, etc. I will also eventually share more examples, of course, go through the trade recaps, go through more examples, etc. But for you, it's important to understand this Delirium trading model first. Once you understand this, then we can build onto that tomorrow with other trading plans. Because again, this is the first door that we need to knock down before we can get to other trading plans. That is very important. So if you understand Delirium, then eventually you can build onto that. That is extremely important. All right, perfect. Thank you.